Welcome to American Dreams, Keys to Success, with your host, Alan Olson. He's a Bay Area native. He's a successful businessman, well-connected, and a friend to all. He's been published and quoted in various media outlets, and he's been honored for his philanthropic contributions.
Ain't that America, home of the free, yeah. Little pink houses for you.
Apple pie, baseball, and now here's All-American Alan Olson.
Welcome back. Today we have with us joining the show Ron Cohen. He's a tax partner with Greenstein, Rogoff, Olson and Company. Welcome, Ron.
Hi, thanks for having me.
Hey, Ron, the government has they've lost a lot of tax dollars over the year, primarily in the foreign bank area, the bank accounts and offshore, and the government seems to have been recently cracking down on this. Can you give us some background of what exactly is going on, and why did they decide now to go after the foreign bank accounts?
Sure. Well, tax on interest, dividends, capital gains offshore has always been taxable to U.S. residents, U.S. taxpayers. For years, people have hidden money in Switzerland and other countries where there was no 1099 reporting to the IRS, so the IRS didn't know about it, and frankly, they got away with it for years where there was no reporting, and so a few years ago, the bank UBS, based in Switzerland, actively started marketing programs to bring money into their Swiss parent company in Switzerland, and one of the benefits of doing that, they advertised, was that it was tax-free income. Well, that got identified by the Department of Commerce and the IRS as engaging in tax evasion, and the UBS was attacked. Many of their executives who fostered that are currently doing jail time. And while that was working through the courts, the IRS decided now's the time to have a voluntary disclosure program to allow people who have been habitually over the years, maybe at no fault of their own, didn't know, were uneducated about the issue, to come in and get cleaned up for back taxes. So a couple of years ago, while the IRS was suing UBS and going through the courts to get to the Swiss tax authorities to force UBS to give the names and addresses and Social Security numbers of U.S. taxpayers who had accounts in Switzerland, to bring that back through the Swiss courts and up into the IRS, and then the IRS would pursue those people while they were going after that, and they were successful getting about 5,000 names of people who had accounts in Switzerland. The IRS said we also need to have a mechanism where people who want to be compliant, but who have, again, for perhaps no fault of their own, not been reporting interest, dividend, capital gains offshore, can come in and voluntarily come in without going through the normal process of incurring huge penalties and perhaps in some extreme cases even jail time for tax evasion. So the IRS, that's how this kind of all arose, as the IRS was pursuing UBS and then said, let's have a blanket program, see how much money we can collect, and give a pathway for people to become legally compliant, paying their back taxes, some penalties, but then avoiding severe criminal penalties and possible jail time.
Wow. So they've already done this voluntary disclosure program in 2009 and 2011.
That's correct. They've already had 2 rounds of it. And the second round, the commissioner, Doug Shulman of the IRS, promised that this was going to be the final amnesty period, and they had to get in. It turned out to be through the end of October last year. Encouraging people to take this very seriously. What's interesting now is it appears they have once again opened an amnesty period. So this is the 3rd round.
Wow. So I've heard the statistics that they've collected to date, around $3.4 billion from the voluntary disclosure program.
That's correct. Yes. And we've had many clients come through our office between the tax, interest, and penalties. They're quite extreme. Yeah.
So round 3, round 1 and round 2 came. They advertised you can come forward with amnesty, and there must have been people sitting on the sidelines saying, well, let them go ahead and catch me. The 3rd round, what is it that in this 3rd round that they're doing differently that will kind of incentivize people to come forward? Or do you think it will work any different?
Well, the continuing risk, and what we've been told by the tax attorneys we work in this area, is that the taxpayer has to get to the IRS and go through the program before the IRS finds them. If they find you either through the UBS bank or some other bank turning over income information to the IRS, or through some other audit function, and they identify you as someone with unreported offshore income, we're currently being told that the IRS's position is 6 months in jail, plus interest, tax, and back penalty. So that's an ongoing encouragement to get to them before they get to you. And the jig is up when you get something in the mail that ends your ability to voluntarily go in. So as people talk to their CPAs and attorneys, they're constantly being told, if this is a problem, you have to solve it. And people who missed the first and second round, some people, even through all the advertising and Wall Street Journal articles, still are completely unaware that this is going on. They become aware of it and say, well, what do I do? And so this is another pathway to try to rectify that.
You know, it's really interesting. A lot of people that well, I'll tell you what, Ron, this is, we have to take a quick break.
Sure.
We'll be right back after these messages.
Even in times of financial uncertainty, GROCO has been recognized as an expert in the tax field.
People come to us when they need help managing their affairs. They want solid financial advice while lowering their tax burden. For over 40 years, GROCO has been a trusted advisor to many of Silicon Valley's most successful entrepreneurs when dealing with the IRS and state tax authorities. We can provide a level of personal attention you won't find at national CPA firms.
For your time and for your wealth, call GROCO today.
Ain't that America, home of the free? Yeah. Little pink houses for you. Oh, little baby, for you and me.
Apple pie, baseball, and now here's All-American Alan Olson.
Welcome back. We're here today talking with Ron Cohen. He's a tax partner with Greenstone, Rogoff, Olson and Company. And we're discussing the IRS Tax Amnesty Program that was recently announced this month for offshore bank accounts. Ron, before the break, we were talking about one of the incentives for voluntarily coming forward and reporting your foreign income is you stay out of jail.
Yeah, that's correct. Usually in the tax world, if you do something wrong, it's a matter of money. It's a mere civil penalty. You pay the back tax, interest, penalty, all's forgiven, and you move on. This, unfortunately, is a criminal matter and can dictate where you end up sleeping at night for 6 months or possibly more. So we take it very seriously. Our firm helps out with the compliance and doing the forms and doing the calculations. We immediately get a tax attorney involved because this is a matter of your liberty, whether you're going to Club Fed for a while to relax. The program is brought about for a third round because the service felt that many people still wanted to come forward. But when they finished the last round, they said, if you didn't come in by the end of the last round, last October, you will definitely, no matter what, be going for jail time. And so they said, well, that's really harsh. So again, they wanted to make it so that people could voluntarily come forward before they were caught or picked up by the service and work through a process to clean up their affairs and get current.
You know, over the years of doing tax returns and seeing many individuals, I started my career at the IRS and then later moved into private practice. But one of the cardinal rules is that you can always find these gray areas on your deductions and maybe look for substantial authority. It's hard to find a gray area on failing to report income.
Oh, absolutely. There's two prongs on this. First is the not reporting interest or dividends on Schedule B on a 1040 or capital gains on Schedule D or some other forms. And the other thing is the FIBAR form, the Form TD 90-22.1. It's a federal law that every June 30th you're supposed to report to the Treasury Department all your foreign bank accounts or investment accounts offshore. Every June 30th, report what you had during the subsequent year. They've taken that very seriously. The rule's been around since the 70s, but was not strongly enforced. And now, for failure to file this FIBAR form, where you simply tell them the name, address, bank account number, for failure to file that account and concurrently not reporting the income on the tax return, now you've incurred a 25% penalty of the highest account value during the last 6 years, of the highest account value. So if your financial accounts actually went down because of the market, you still owe the 25% penalty on the value it was in 2007 before the market crash.
Now, let me understand this. What you just said, we're talking about failure to report income, but the penalty is on the value, the highest value of the account.
The FIBAR penalty. There's also income tax penalties for failing to file, failure to pay, but the massive one of 25% of your highest account value during the last 6 years. So if you have $1 million account, that penalty alone, before the tax, interest, and normal filing penalties, can cost you $250,000 on a $1 million account.
So this is for a person that is voluntarily coming forward.
And these are the people that are voluntarily coming forward. The threat is that if you don't come forward, the penalty can be 50% or 100%, or they just put you in jail, period.
Now,
that's the hook.
Even the people that go to jail still pay the penalties?
Absolutely, absolutely.
So what we're saying basically is that if you come forward and if you report and comply with its amnesty program, you won't go to jail, but you're not necessarily going to get out of the penalties.
Yeah, the penalties will apply, and I can tell you the letters you get during going through this process talk about your liberty. You're staying out of criminal prosecution in jail. So it's a extremely serious situation that anyone involved in it needs to get competent legal and accounting advice very quickly.
Okay, Ron, we need to take a quick break, and we'll pick this up right after the break. Nothing's more important than spending time with your family. At Greenstone Rogoff Olson Company, we're trusted advisors to the highly successful. Our goal is to help you find the right strategy to protect your wealth for yourself and those you love. Kids! Why do I feel like I've just had an audit? As trusted advisors to the highly successful, we'll make sure you don't lose your shirt.
Ain't that America? Home of the free, yeah. Little pink houses for you. Oh, baby, for you and me.
Apple pie, baseball, and now here's All-American Alan Olson.
Welcome back. We're here today visiting with Ron Cohen. He's a tax partner with Greenstein, Rogoff, Olson and Company. And we're talking about the new IRS tax amnesty program for offshore bank accounts. Now, Ron, I understand 2009, the IRS collected around $3.4 billion. Then they ran another amnesty program in 2011. They collected another $1 billion of revenue. So roughly it's about $4.4 billion to date. So now 2012, they say, well, let's go ahead and we'll do this program one more time. What do you think the likelihood is of them collecting more tax dollars in this?
Well, the Wall Street Journal ran an article with a New York tax attorney who reported that for every 6 people that came in to talk to him about this situation, and this was an expensive attorney, so they only came in if they really had a problem, 5 of them declined to enter the program. So that's a large number of people.
That's huge.
Still out there mulling this over, hoping that it just won't arrive. They'll never get that letter in the mail. So that's what the IRS is after, that population of folks. And so the way they're doing it this time, before there was an end date of the program. Now they're leaving the program with an indefinite end date. They can change the terms of the program at any time, and they can end it at any time. Now this is intentional psychological things that the IRS is doing, because they definitely want the people out there to be nervous, to think, I've gotten 3 tries at this because this is the 3rd program, but now we're not going to tell you when it's going to end, and it could end tomorrow, and if it ends tomorrow, then you have no pathway to avoid criminal prosecution. The penalty rate this time is 27.5% of the highest account value. It was the first round, it was 20%. Second round, it was 25%. And now it's 27.5%. They're raising the ante for the people who stayed out, making it more expensive for penalty-wise. So these, if you have a balance outside the U.S. of less than $75,000, the penalty rate can be as low as 12.5%. And if you just inherited money and can prove that you really never even knew the accounts existed, the penalty rate can be as low as 5%. But most people we run into, they had reason to know, they were getting their bank statements every month, and they're going to be up at the 27.5% FIBAR penalty, in addition to tax, interest, and non-filing, non-paying penalties on their, or failure to pay penalties on their income taxes. And so we've run the numbers on this, and it runs up, you end up losing 60% of your money. The tax, interest, and penalties, we do a little spreadsheet, and that's what someone should do as they start going into this program, have their attorney or CPA run the numbers, tell them how bad this can be, and then they can make a decision. Of course, we encourage people to come in and get this cleaned up, but they need to quantify what the impact of going through the program is. What's the cost to become current and compliant?
So, Ron, do you advise a person use a CPA or an attorney when voluntarily disclosing their unreported income?
So this whole process goes through the IRS Criminal Investigation Division. And as you know, Alan, us CPAs generally try to avoid those people. So the way these programs work is the first contact can be with the CPA or the attorney, and generally we work together as a team, because when dealing with people who carry badges and sometimes guns at the IRS Criminal Investigation Division, you need a criminal attorney to protect your rights. We will do all the accounting, tax work, tax filing forms, and it makes a good team. And it's really necessary because you and I, for a living, don't keep people out of jail. We just get them compliant. So it's a team effort. The attorneys then look for a CPA to work with. Often they come to us. And if the first point of contact with the CPA, we have a number of attorneys. We've worked on several of these projects through successfully, and we refer to them, and we get the team going and get the paperwork going.
That makes a lot of sense. The last thing you want to do is not have someone between you and the IRS as you go through some type of IRS representation program. There's nothing like the feeling of the power of the IRS. With the stroke of the pen, they can bring complete misery into your life. Mm-hmm. And so I think it's good that they open this voluntary disclosure program again. At least it leaves the door open for people to stay out of jail, this time with unreported income. The interesting thing, though, is it's where they're allowing you to come forward. It's not without the loss of financial resources. They have been pretty serious about these penalties, or not forgiving people in the process.
Yes, I mean we've had grandmothers in their 90s who left Nazi Germany in the 40s and put money into a Swiss bank account, and their friends and relatives told them, that's okay, you never have to report that, it's no big deal. And all of a sudden, all this is happening to them. Had a lot of people in our conference room crying as we go through the just life-slapping process to get through this. But we've completed several of these projects, and one of them, for example, was an executive with a high-tech company, and he knew criminal action by the service would end his entire career, ruin his finances, and he had to sort it out. So it's a process. You work through it. Lots of paperwork has to be done in a certain order, and again, we're happy to help. And whether it's us or anyone, if you're driving down the road and have significant amounts of money in some offshore account, Switzerland, China, Hong Kong, Indonesian, it doesn't matter. Please do some deep heart thinking about where you stand on this, and please get good advice to know what your options are. And take advantage of this program. What everyone's afraid of is the IRS will say, that's it. It's been 3 rounds. Anyone we find, or anyone who even comes in voluntarily now, 6 months in jail. That's the hammer that they have, is that there'll be no pathway without jail time to solve this. So everyone's getting another chance. And certainly in your 2011 returns coming up, even if you don't clean up the back years, which I'm recommending you do, but if for some reason you decide not to, please report everything correctly on your 2011 returns as we go through the April tax season.
So, Ron, this has all been good stuff, and appreciate having you on the show. If someone wants to contact you for more information, how would they do that?
Right. I'm at Greenstein Rogoff Olson Company. We're at 510-797-8661. And you, of course, can find our website, www.groco.com. Thanks a lot for having me on.
Thank you, Ron. Ron Cohen, tax partner with Greenstone Rogoff Olson Company. We'll be right back after these messages.
You're listening to American Dreams with Alan Olson on AM 1220 KDOW.